If you rely on Social Security benefits, you know how crucial that monthly deposit is. It covers rent, groceries, medications, and provides a sense of stability. Even a single missed or delayed payment can throw everything into disarray. Recently, something subtle has begun to shift within the banking system. It is not a change at Social Security itself, nor at the Social Security Administration, but within the banks that handle your money. On the surface, it appears technical, a routine update to rules, the kind of detail most people overlook. But beneath that surface, there is growing unease. These adjustments to bank policies may influence how Social Security deposits are processed, verified, and released. Not for everyone, and not all at once, but sufficiently that people are starting to notice minor disruptions and are asking the same persistent question: why did my payment take longer this month? Before drawing conclusions, it is essential to understand clearly: this is not a reduction in benefits. This is not Social Security running out of funds, and this is not some abrupt cancellation of payments, but it is a change. And when changes involve banks, automated systems, and government deposits, the effects can ripple in unexpected ways. Many individuals have been expressing confusion, worry, and frustration. They report that their deposits arrived later than usual. They mention banks asking for verification of information that has been on file for years. They receive notices they do not fully comprehend. That is why we need to pause and examine this carefully, because what is occurring is not loud or dramatic. It is quiet, and quiet changes are often the ones that catch people off guard. Currently, banks across the country are adjusting how they review incoming government payments. That includes Social Security, Supplemental Security Income, Social Security Disability Insurance, and survivor benefits. Why now? That is the aspect most headlines are missing. Over the past year, banks have been under increasing pressure to strengthen fraud detection, identity verification, and payment tracking. This applies not only to credit cards or wire transfers, but to direct deposits as well, especially those issued by the government. And when those rules change, the first to feel the impact are not large institutions but ordinary people, people like you. What typically happens in such situations is subtle. A deposit that usually appears at midnight might show up the next morning. An account that has been inactive for months might suddenly be flagged for review. A minor name mismatch that never mattered before might now become significant. None of this means your benefits are gone, but it can lead to delays, questions, and unplanned stress. Here is a truth many do not realize. Social Security sends the money, but once it enters the banking system, banks control how quickly it is released into your account. That is where these rule changes take effect. Some banks are managing this transition smoothly. Others are still adjusting, which is why experiences are not uniform. You might be thinking that your payment arrived on time, nothing changed, and that is good. It may well stay that way, but others are noticing slight shifts. And when you are on a fixed income, even a small shift feels substantial. This is also where rumors begin. People hear about bank rule changes and immediately assume the worst: that Social Security is being cut, that benefits are being frozen, that something is being taken away. That is not what is happening. However, there is something new to understand. Because when systems update, there is always a transition period. During that period, confusion spreads faster than facts. What you need now is clarity, not panic or speculation. Just a clear picture of what is changing, what is not, and why it matters to you personally. In the following discussion, we will break down exactly what these bank rule changes entail, what banks are now checking that they did not before, and why Social Security deposits are part of that process. Some of it might sound mundane initially, but stay with me, because once you understand how this works, it completely changes how you perceive a late or unusual deposit. And what happens next may surprise you. Let us talk about what actually changed, because this is where much confusion originates. On the surface, banks are calling these updates routine compliance adjustments. That sounds harmless, almost boring, but in practice, these changes affect how banks review and release incoming deposits, especially those from the federal government, including Social Security. Over the past year, banks have been dealing with a sharp rise in fraud linked to government payments, stolen identities, hijacked accounts, redirected deposits. Regulators took notice. Consequently, banks were instructed to tighten procedures, not just for withdrawals or transfers, but for deposits as well. Here is what that means in plain language. Banks are now conducting extra checks on certain direct deposits before they fully clear into your account. These checks do not happen every time. They are triggered by specific signals. Things like accounts that have not had recent activity, minor name or address mismatches, changes in banking behavior, older accounts that have not been reviewed in years, and yes, government deposits are included in that review process. That is the part many people do not realize. Social Security sends your payment on schedule, on time, in full. But once that payment hits the banking network, automated systems take over, and those systems do not know you personally. They follow rules, new rules. Some banks have updated how long they hold deposits while these checks run. Others now request verification where they did not before. That is why someone who has had the same account for 10 or 20 years might suddenly get a notice, a brief delay, or a request that feels unnecessary. From the bank's perspective, it is about fraud prevention. From your perspective, it feels like something changed overnight, and that is fair. Now here is what is not happening. Social Security is not changing payment dates. Benefits are not being reduced. There is no new income test tied to these bank updates, and there is no policy allowing banks to take your benefits away. That is important to state clearly. What is changing is the way banks confirm that deposits land in the right place, under the right name, into an active account. In most cases, these reviews are quick, sometimes invisible, but when they are not, people notice. A deposit that usually shows up late Tuesday night arrives Wednesday morning instead. A payment appears as pending longer than usual. A letter or email asks you to confirm information you have not touched in years. And when that happens, it does not feel routine at all. It feels personal. Some banks rolled these changes out months ago. Others are still adjusting right now. That is why experiences are mixed. Two people receiving the same Social Security benefit can have completely different outcomes depending on their bank. This is also why calling the Social Security Administration does not always provide answers, because from Social Security's side, everything was sent correctly. The delay, if there is one, happens after that. And this is where people get stuck between two systems. Social Security says the payment was sent. The bank says it is still processing. That gap is where stress lives, especially if you rely on that money for fixed expenses that do not wait. Rent does not wait. Utilities do not wait. Prescription refills do not wait. So, even a short delay feels heavier than it sounds. Before you become too worried, there is something else you should understand. These rule changes are not permanent disruptions. They are part of a transition period. What usually happens is that banks tighten systems, identify patterns, and then things smooth out again. But during that transition, a small number of people experience bumps, not because they did anything wrong, but because automated systems are learning, and those systems do not explain themselves very well. That is why this feels confusing right now. If you receive Social Security through direct deposit, most months will still look exactly the same. Your payment arrives, your bills get paid, nothing feels different. But for some people, small changes are starting to show up, and the key word here is small. This is not about losing benefits. It is about timing, access, and temporary friction. Here is the first situation people are reporting. A deposit that normally hits late at night shows up the next morning instead. Same amount, same date on paper, but a few hours later than usual. That can matter if your account runs tight or if bills are scheduled to pull automatically. Another situation involves accounts that have not had many changes in years. If your bank account has been quiet, unchanged, and untouched for a long time, it may now get a routine review. That review can briefly hold a deposit while the bank confirms everything matches. Name spelling, address formatting, account status. Things that never mattered before suddenly get checked. For example, a middle initial on your Social Security record that does not appear on your bank account, a shortened first name versus a full legal name, an address that has not been updated since you opened the account. None of these mean there is a problem with your benefits, but they can trigger a pause. Another group noticing changes includes people who recently changed something. A new bank, a new account number, a change after a spouse passed away, a switch from paper checks to direct deposit. Any recent adjustment makes automated systems look a little closer. Again, not because something is wrong, but because rules are tighter than they used to be. Some people have also received verification letters or messages, not from Social Security, but from their bank. The wording can be confusing. It might mention account review or deposit verification, and if you are not expecting it, that alone can raise anxiety, especially when the letter arrives close to your payment date. Here is what usually happens next. The bank completes the check. The deposit clears. The account returns to normal. Most delays, when they happen, are short, a day, sometimes two. But when you live on a fixed income, that window feels much longer. And that is why this matters. Now, let us talk about who is least likely to notice anything. If you have had consistent deposits, steady account activity, and no recent changes, chances are your payments will continue as usual. Many individuals will never see a difference. But the reason we are discussing this is because for those who do notice something, it can feel alarming if no one explains it. A late deposit leads to questions. Questions turn into rumors. Rumors turn into fear, and fear spreads fast. Here is something important to keep in mind. If your payment does not show up exactly when expected, the most common outcome is not loss, but processing. Social Security payments do not just disappear. They are tracked, logged, confirmed. What changes is how quickly banks release them during this adjustment period. And once an account clears a review, it typically does not get flagged again. That is why many people experience a one-time delay and then nothing else. Still, when you are the one waiting, that logic does not always help in the moment. Let us slow everything down, because this is the part that puts things back into perspective. When banks roll out changes like this, there is always a period where systems adjust, staff learns new procedures, and automated reviews get refined. That period never lasts forever. What usually happens is simple. Banks identify what actually needs attention. False flags drop off. Deposits start moving smoothly again. Social Security payments, in particular, are among the most closely monitored deposits in the entire financial system. They are predictable. They are scheduled. They are verified at multiple levels. That does not mean delays cannot happen, but it does mean there is a strong safety net built in. If a deposit is briefly held, it is tracked. If there is a question, there is a record. And when reviews are completed, payments resume normally. This is why most people who experience a delay only experience it once. After that, their account is essentially cleared under the new rules. And here is something else worth remembering. A delay is not a denial. A verification is not an investigation. And a bank notice is not an accusation. It is paperwork catching up to technology. There has been a lot of noise online about what this means long-term. Some headlines suggest this is the start of something bigger. Others imply Social Security itself is changing how it pays people. That is not what is happening. Social Security has not changed how it sends payments. The schedule remains the same, the amounts remain the same, the protections remain in place. What changed is the middle layer, the banking layer. And once that layer stabilizes, things usually feel normal again. This changes how you think about a late or unusual deposit. Instead of assuming the worst, you understand the process. Instead of panic, you have context. That alone makes a difference. Additionally, consider the broader context of financial security. In an era where digital transactions dominate, the need for robust safeguards has never been greater. Banks are obligated to protect both their customers and the integrity of the financial system. These updates, while occasionally causing temporary inconveniences, are ultimately aimed at shielding your funds from unauthorized access. Imagine a scenario where someone attempts to divert your Social Security payment to a fraudulent account. Without these enhanced checks, such theft could go unnoticed until it is too late. Thus, while the process may introduce delays, its purpose is to ensure that your money reaches only you. Moreover, it is worth noting that Social Security beneficiaries are not alone in this. Recipients of other government benefits, such as veterans' payments or tax refunds, may also encounter similar verifications. The entire ecosystem of government disbursements is undergoing a shift towards greater security. This coordinated effort involves multiple agencies working alongside financial institutions to close loopholes and prevent exploitation. For you, the recipient, this might translate into occasional extra steps, but those steps contribute to a more secure financial environment for everyone. If you do experience a delay, there are practical steps you can take. First, check your bank's online portal or contact their customer service to inquire about the status of your deposit. Often, the issue can be resolved quickly by providing updated information or confirming details. Second, ensure that your contact information with both Social Security and your bank is current. An outdated phone number or address can hinder communication. Third, if a delay causes financial hardship, some banks may offer short-term solutions, or you might explore community resources designed to assist with temporary shortfalls. Being proactive can alleviate much of the stress. Remember, the Social Security Administration has safeguards in place for payment issues. If a deposit is significantly delayed, you can contact them to confirm the payment was sent. They can provide a payment confirmation number, which can be useful when speaking with your bank. However, as mentioned, most delays occur within the banking system, so starting with your bank is often the most efficient approach. In the grand scheme, these changes are a reflection of evolving technology and security needs. Just as we have adapted to new ways of banking online or using mobile apps, we must adapt to these behind-the-scenes improvements. The goal is to create a seamless and secure experience where your benefits arrive reliably every month. While the transition may have bumps, the long-term outcome is intended to be positive: reduced fraud, increased trust, and continued reliability of essential income. By staying informed, you empower yourself to navigate these changes with confidence. Knowledge dispels fear and replaces it with understanding. So, keep this information in mind, share it with others who might benefit, and approach any unusual activity with a calm and informed perspective. Your financial well-being is paramount, and taking the time to understand these processes is an investment in that well-being. The most important thing right now is not to worry. It is to stay informed and steady, understand what is changing, recognize what is not, and remember that these systems are designed to protect your money even when the process feels inconvenient. If you found this explanation helpful, take a moment to stay connected. Subscribe so you do not miss future updates. Stay informed so small changes do not turn into big worries, because your benefits matter, your peace of mind matters, and clarity is always better than fear. Thank you for spending this time with me.